Today we're going to be exploring the 3-bar reversal. It's one of my favorite chart patterns of all times. I'm going to be explaining what it is, how to identify it on the charts, and how I like to use it for order entries. The great thing about the 3-bar reversal is that it can be found on multiple time frames and all asset classes, including crypto, Forex, futures, stocks, everything. I primarily trade futures, and that's what we're going to be exploring today. So let's go over to the charts and I'll explain further. So here we are on the charts. I'm going to just draw a 3-bar reversal real fast, and here is our first bar. Say that we're in an uptrend and we have a bear candle, bull candle, which is green. And this is what's called an exhaustion candle. So it's a very large green candle at the end of a trend, or at the beginning of a trend reversal. So you see this big green candle signifies the strength of the bulls, the last ditch effort. And the next candle, which is candle number 2, is a small candle with a large wick. That is the key for this candle. This is a doji, it can be a hammer, inverted hammer. So what we're gonna do is draw a hammer probably here. So this is our hammer candle, and what this candle signifies is that the bulls have come in. They tried to push it higher above this price, tried to get a better auction price. Couldn't do it, and they closed near the same place where the price opened. So the bulls are running out of steam. Now the next candle, which is our third candle in the 3-bar pattern, is a bear candle. And we like to see that. I like to see it with not many wicks on it. A very strong red candle. And this is the bear candle. So this is the ideal 3-bar reversal. This wick, actually can be larger like this, creating a doji. It can be a hammer. As long as it has a large wick, that's what we're looking for, a large top wick. The tail doesn't matter too much, but we want a large wick. Let me get this out of here. A large wick signifying that the bulls have tried to take it up, the price up, and they couldn't do it. So then we have the reversal here. As far as entries, there are 3 different strategies, well, several different strategies, 3 main ones that people use. A lot of people like to wait till this third candle closes and then enter there. Say it can be this way. It doesn't have to be perfect. Like I said, there's hardly ever a perfect scenario like this. This is the perfect structure of a 3-bar candle, a 3-bar pattern. But sometimes the candles are shorter, different sizes. You know, they're not always perfect. So some people like to enter when this third candle closes here, and then you know that you have a nice reversal. Some people get in a little bit early, and they enter as soon as the third candle passes the doji. And some people wait until the price passes the initial candle, the first candle, and that would look like this. So their entry would be here. All of them can be effective. It's up to you to play around and see which one suits your trading plan the best. So let's go over and take a look at an example in action. So here we are. We have a 3-bar reversal up here, and then it came down. It's coming down very strong, and let me hit the play button here. And then it comes down, creates this pin bar here. This is our second bar in the 3-bar formation. So here's the first bar, nice large red candle. And then we have the indecisive candle here with the large tail or wick. And then we have the large green candle signifying a reversal of the trend. And then we'll just watch it play out. And as you can see, it just plays out beautifully until we get our next one up here. So the great thing about this is that you can find it on every asset, like I said before. So let's go over and take a look at the NQ. This is the NQ. Let's go take a look at it at the ES. This is the NQ 5 minute. We're gonna go over to ES 1 minute, which is over here, and we're gonna take a look at that. So here we have the 1 minute chart, and we have so we have up, down, up, down, up, down. This is primarily a downtrend. Of course, we have lower highs and lower lows, signifying a bear trend. And then we get down here to an area of support. So this is a very vital aspect of using the 3-bar reversal. You can't just use it by itself. It must be in an area of interest, an AOI. So this area is a support area. Another AOI is a fair value gap, something like that. So you want to identify those first, of course, and then you implement the 3-bar reversal. And you also using higher time frames to identify these areas of importance. And then you drill down into a 5 minute or 1 minute and look for the 3-bar reversal. And that's the most effective way to use it. So here we are, coming down here into the support area, which was resistance at one time. They broke through, now it comes back, now it's support once again. We have a failed 3-bar reversal here because actually the 3rd bar is very small. So it has a large wick. Here's an example of a 3-bar pattern that is invalidated because of the 3rd bar is mostly wick and small body. So we need mostly body and small wicks on the 2 bars, the 1st and the 3rd bar, and the middle bar, the 2nd bar, has to be the opposite. Small body, large wicks, which we have here. Let me zoom in, take a look at this real quick. So here we have it. This is the 1 minute chart, like I said. We came down, broke this support here a little bit. This is this little area in here. Came down, made kind of equal lows here. And then we had our doji. We have our green candle, and then off to the races we go. And then we have another 3-bar reversal right here. This first candle was not too much of an exhaustion candle, but it does have a large wick, which also signifies a exhaustion in the uptrend. So we have another wick here in our 2nd candle, and then we have the 3-bar reversal here for a small retracement. One of the reasons I love it for an entry pattern is because it gives us our SLP, our stop loss placement, which is vitally important for any trading strategy. It's the most important thing is risk management. Risk management, risk management, risk management. We're not even traders, we are risk managers. So the first thing you want to do is find a good place for your stop loss, and that is right above your 3rd candle. So you see this coming up. We create the doji candle. This one's a hammer. And then we have a great placement right here for our stop loss. So we can put our stop loss here and then enter either here or when it breaks the 1st candle. 1st candle is probably the best strategy. Once that neckline is broken in the 3-bar from the 1st candle, we can enter here and then put our stop loss here. And then we can just ride here 2 to 1, at least 2 to 1. You always want to have a 2 to 1 risk reward. So we have our stop loss here and we have our risk here. Could actually take it down to 2 to 1. And let's see if this plays out actually. Yeah, right here. So it would have taken us right to here and we would have taken our 2 to 1. That's what I love about the 3-bar reversal. It gives you the entry, it gives you the stop loss, and it gives you a great risk reward, which is always great for trading. So that's, in a nutshell, that is the 3-bar reversal. If you have any questions or comments, just leave them down below, hit subscribe, and I'll see you in the next video.